Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. Here's a weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. There have been, and still are, two main bullish Andrews pitchforks that you can see here on my daily chart. The original late March to early July action and the more recent early July to mid-September one. Both these are crucial in the running of this market and to the overall bullish incentive. In the original late March to early July pitchfork, the middle tine, currently at 277.25, had shown back in August how good a resistance it was. Then in September, the lower tine, currently 276.25, of the newer early July to mid-September pitchfork started taking on some of the heavy lifting of the bullish support by commencing and showing the more recent and more acute bullish angle of attack. Admittedly, we had a few closes below, but there were no two consecutive closes below, which was important. Anyway, that led to 4 weeks ago the market pushing up over the previous August high and higher ever since. Yet though higher, the action was until late last week still capped overhead by the middle tine of the original larger bullish Andrews pitchfork. We also saw the market enter the congestion between 267 even and 269.5. In this congestion there was an immediate limited rejection down to the lower tine. Yet the toing and froing there led to some further large intraday indecision, eventually leading to a close above all that congestion 2 Fridays ago. Last week it started with dipping back into that congestion, but this time from above. And it was much like ammunition gathering exercise, getting set for a further attempt higher, which is what happened last Friday with a gapping higher bullish opening white Mariposa. It was also the first close over the middle tine of the original larger bullish Andrews pitchfork. That is the first time since mid-August, and this despite the rises we'd seen earlier. It was important to note that all the action until last Friday had been between the then overhead middle tine and the newer lower tine below of the July to September Andrews pitchfork. Now, as you can see, this market, like many other grain markets, was getting squished, and such a move higher, much like toothpaste coming out of a tube, was what eventually happened. This week we'd seen prices slide higher using the middle tine as base of action, moving into congestion between 277.25 and 284.5. which contains a November 2012 high at 279.25 and the March 2008 high at 284.5. Anyway, all this action prompted me 3 weeks ago to think about the August to September period as being a possible hesitation area in a possibly larger July to date bullish halfway hesitation pattern. Originally that was a huge ask to think about. And just in case, I'd labelled a possible target X for such a pattern up off the top of my daily chart then in the 288.5 area. Well, originally it was a big ask, but now today it does not seem so much of an ask. I'll now finish up with something I've repeated again and again. Please continue to keep in mind the bullish March to July Andrews pitchfork is still very much intact, and until that is broken, redesigned or reassigned, then it will rule the overall bullish incentive. Plus, this is all taking place in the shadow of July's monthly key reversal up. London UK feed wheat. 6 weeks ago, prices stabilised just under the then short medium moving average, currently at 196.85, and amid the undergrowth of lesser Fibonacci levels at 183.45, 182.20 and 181.60. 6 weeks ago prices started once again to rise. Now the rise was somewhat spectacular and uncalled for, as the market moving up made 3 gaps within 2 weeks and yet still continued to move higher. Up through the then slowly declining medium moving average, currently at 190 even, and 4 weeks ago up over the long moving average once again, properly this time though. We had a little hesitation at the end of 4 weeks ago that ran into the start of 3 weeks ago before a strong kick upwards with an immediate countering key reversal up, just combined with a bullish engulfing pattern. This pushed prices up towards testing the old March 2013 high at 205 even. Early 2 weeks ago, the market launched a attack higher that finally cracked the March 2013 high. Now, regarding this March 2013 high, I'd spoken in my commentary from 4 weeks ago, and I quote, "And are now seemingly stalled a little as we approach the March 2013 high at 205.05, end of quote. However, I added immediately after this, and again I quote, "All this action has allowed me to draw a July to September bullish Andrews pitchfork, and it is the lower tine of this pitchfork, currently at 210.15, that has recently shown the bullish angle of attack. Thus, the middle tine above, currently 226.65, is the main rising bullish resistance beyond the March 2013 high. It is, as I've said elsewhere, until this bullish Andrews pitchfork is broken, changed to a bullish shift pitchfork, or reassigned and retired into something else, then it will drive the bullish incentive higher in this market." End of quote. Thus we come to this week. After a dip down last week below the lower tine, we saw a breach, but only a mild one, as there was only the one closed below the tine. Before last Friday, we saw a combined bullish opening white Mariposa and bullish engulfing pattern. This ignited a fresh move higher, a gapping move higher, such that this past Wednesday we've seen prices rise up and reach target X. Now, I had previously detailed target X 2 weeks ago, and I quote, "One final thing to add, and I've expressed this last week here and elsewhere, in some of the other grain markets, which have shown a similar aptitude. It is to look at the July to date action as a bullish halfway hesitation type pattern. With this in mind, I had previously placed a prospective target X in the 213.15 area. This is not as insurmountable a target as elsewhere, but let's not kid ourselves. It is still a big ask, and I've not altered it a bit from last week." End of quote. Well, this big ask became a big reality as we'd reached target X and seemingly stabilized here for now. Overhead, we have the horn top made back in May, which is coincident with the 2013 high, all at the 2015 area. This is the next obstacle overhead. Meanwhile, please don't forget the rising lower tine. This tine crosses over the 215 area at the end of next week, so it'll be interesting to see which is the greater, the overhead flat resistance or the rising support, which will hold and which will fail. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.